Hey everybody, I'm Coach Tim with Advanced Kingdom TV, here to bring you another video about an edge that I found in the market. I was in prayer one day and the Holy Spirit led me to some confluences. Can you trade with the Holy Spirit? Yes, you can. And then my eyes opened up to three confluences that I've coined as a 3M Advancer Edge. Haven't seen anybody teach on this yet. Um, there may be some teaching out there on it, but I haven't found it. It's called the 3M Edge because 3M stands for 3 minute time frame. This is where you can find this signal on. Take it on any instrument. Whenever you see the setup, it's a high probability trade if it occurs. Now, this only works in trending markets. If the market is in consolidation, this strategy does not work. So it's only for trending markets at support and resistance levels, but it gives you an edge to know when price is getting ready to turn around. All right, 3M Advancer strategy. Let's get to the video.
All right, perfect. Trading view. There we go. All right, everybody can see my screen?
Yes.
All right.
Yes.
Cool. Love it. Wonderful. All right, so a large part of what we've been doing is trading overbought, oversold markets. We use the TDI to do that. We have certain settings that we use with the TDI. We never touch those settings. RSI period 8, band length 34, fast MA is at 2. Since we've been trading the TDI, we've never touched those settings. We've always been in those settings, and we haven't really had a reason to. The strategy has been working. We've been successful. As long as we control risk management, we've been good. And so individuals have gotten funded. Strategy works. You've customized it to fit your needs. You've differed a little bit just based on what you're looking for, and that's been great. I usually trade between that 60-70% range over a month. When I look back at history, that's a pretty high win rate. When I get some months it drops down to 50%, and that's still good as long as you have a 1 or 2 risk reward. You're fine with that kind of win rate. So no reason to change the strategy, but we're going to introduce the 3M edge in order to enhance that win rate and make it so that we're all on they're all able to increase the win rate. So very quickly, if you notice some of the things that we talk about on the morning calls, we talk about liquidity sweeps. I think some of your groups have talked about liquidity sweeps. We talked about smart money concepts, SMC concepts, where they look to sweep the lows and then push to the highs. We are familiar with those concepts, liquidity. And so a lot of those concepts deal with what they call mean reversion. MEAN, the mean, where the average of the price. And so there's a few different ways. We use MAs, we use VWAP, we use a full price likes to seek harmony. So usually we'll find it pulling to an MA, pulling to a VWAP. And normally when it does that, when price does that, and let me just turn my EMAs on. Normally when price does that, that's called a mean reversion, where price will, like a rubber band, price will revert back in a strong trend. Price will revert back to what it believes a fair price is in the market. And so sometimes that will be VWAP, sometimes that will be a MA that it'll pull back to and then continue on its original trend. We can see here on this strong trend, it's pulling back to VWAP and continuing in. So what most traders do and what we do, we look at the TDI for overbought markets in a bullish trend. And then we look for an oversold market in a bearish trend. And we try to catch that mean reversion, whether you know it or not. That's what we're doing, is that when it pulls back, the TDI gives us a signal. We get into that into that buy or sell, right? And so that's what we've been doing. It's a really successful strategy. We use the TDI to time that. Some of us are on the minute chart, the 30-second, the 3 minute, regardless. So that doesn't change. That's a good concept to have. But what increases the what most smart money and what most institutional traders, that's the word I was looking for. I was trying to figure out what I was trying to say, but institutional traders, most institutional traders are aware that stop orders and different things are sitting just below the levels of support and resistance. So, like for instance, right now there is a level of support and resistance that is here, and then here. So here's support. There was a lot of ideas that came in from retail traders that thinking that this support was going to hold up, and so usually price will sweep below those stop orders, grab liquidity below it, and then continue it in its original direction. Similar on the downside, individuals may have seen uh, price become very bullish and entered in sell orders. And they may have entered in sell orders here and said, well, price is very bearish. Well, enter in sell orders, and then price just continues to the upside. All right, so it works both ways on that, but that's just the way that the market flows, institutional. And so we're left with trying to time when to get into those orders, where to place our stop loss. And so what this edge does is it gives you the perfect timing for identifying when the market is really overbought or when the market is really oversold. And by adding in a few components, we're adding in 3 components. We're adding in a filter to verify the trend. And then we're adding in our normal shark fin and divergence confluence. And then we're adding in a candlestick identifier. And with those 3 things during the right trading hours, you can get pretty accurate on your entries. And so let me walk you through that. Let me show you that of what that looks like. All right, let me move that over. Yeah. Okay. So before I do all that, I'm on NQ. So we can use this on any instrument. Each instrument will be a little bit different, but this is what we noticed and how we stumbled across it, is that when you identify, we like to identify shark fin. So let me find a really good shark fin to the upside. So here's a shark fin right here. This is a really deep shark fin. And let me increase my screen size. And if you can't see anything or if something is off, please let me know. All right, so here's a shark fin right here. It's a 15-minute shark fin. Everybody's familiar with what a shark fin is. And here it is right here. All right, so it does play out. I'm on the 15-minute candle. So 1, 2, 3, 4, 5, 6, about 6 15-minute candles, an hour and a half. That move plays out for an hour and a half. It plays out to the upside. All right. And we take that and we like that. It's a great trade. Here's a shark fin divergence right next to it. That it comes down a little bit lower, TDI stays higher. We like those kind of trades, and that's great. There's an anomaly that occurs though, that when you look at those buy shark fins and you put a session anchored VWAP on your chart, you very rarely will find a deep shark fin that is above VWAP. And so if you do your history, here's another shark fin, it's below VWAP. Here's another shark fin, it's below VWAP. And so when I first discovered this, I walked away with that being the truth, is that, okay, here's a shark fin here, and it's below VWAP. And so Um, that's interesting because why are these shark fins always below VWAP? Why is that always the case on the 15 minute? And so I was like, well, that can't be true. There has to be some above VWAP. And so I began to search and just search through shark fin. Here's another shark fin. And where is it? It's below VWAP. Here's another shark fin and it's below VWAP. All right, okay, that's interesting. Here's two more and look at where they're at. VWAP. Okay, so now you know, it's interesting that okay, we found a case where on the 15 minute you will never find, could that be the case that you will never find a shark fin, a buy shark fin over VWAP? And sure enough, that's the case where we're not finding those shark fins. So I'm scrolling left, and this is important for us to see. Okay, here's one. Huh. There's one right here. Very rare. It took weeks to find that, but I found one. All right, let's find another one. All right, so what am I going to trade one once a week? When we find it, they're usually under VWAP. So then you start going through the higher time frames. And when you go through the higher time frames, you start doing that back test. It's the same case where shark fins are below VWAP. Buy shark fins are below VWAP. And the same is the case for the sales side. If you're looking for sales, here's a sales shark fin, but guess what? It's above VWAP now. Oh, the sales shark fins are above VWAP. So as you can see, it's a very rare occurrence to find a buy shark fin above VWAP and a sell shark fin above VWAP. Go to any instrument, go to any pair, just for argument's sake. We're going to go to anyone. Let's go to Euro USD. And let's do the hunt. Oh, here's a shark fin. Oh, guess what? It's above VWAP. Here's a buy shark fin. Oh, guess what? It's below VWAP. Okay, so we have a truth here that we found one instance, but it's very rare. So we can't really trade off of a very rare case. And so I went through and did that. I think it's really on the 10 minute and above when you look at that. Here's another shark fin on the 10 minute. When you start the higher you climb, the less you'll see it. You will not find on the higher time frames, you won't find like this 4 hour shark fin. It's below VWAP. Like you won't find it on the higher time frames. And so that was just a truth that I walked away with, is that okay, well, that's just something we could add to it. That shark fins, buy shark fins are always going to be below VWAP. And sale shark fins are always going to be below, are always going to be above VWAP. That's just a truth. All right. And so I walked away from that testing session with that conclusion, is that we'll find those just in those, that will never be the case until I got down to the lower time frames. And so if you go down to the 5 minute, it's still the truth. Here's a buy shark fin, but we're below VWAP. So it's still the case. Here's a sell shark fin, but we're above VWAP. And here's a sell shark fin, but we're above VWAP. Here is a buy shark fin, but we're below VWAP. So the case still comes. So I said, well, let me scroll through. And every time frame I scroll through, I begin to see the same thing on the lower time frames. And so what I found was that's the case. And so I said, okay, well, if that's the case, maybe we can find something around there. If it's always like this, maybe we can find something about this. And so you see the 5 minute shark fin. I was like, oh, okay. Maybe then if it's close to VWAP and it is a shark fin and price stays above, then maybe that will play out. And that's normally the case. I found that on the 5 minute. right here. And so I ran the strategy tester, and this is the strategy tester here. You just enter in the code into Pine Editor, and you add that to the chart if it's a strategy tester, and it will run that scenario. So that scenario is running, and based on the conditions, there was only one trade that the strategy tester found where it met that confluence on the 5 minute. And so that was an aha moment. It was like, oh, okay, well, let me look at it on the 4 hour. Oh, it doesn't exist on the 4 hour. Let me go to the day. Oh, it doesn't exist on the day. Let me go to the hour. Oh, it doesn't exist. That condition does not exist on the hour. And so it wasn't until I got to the 5 minute, I said, okay, one time it exists. But then as I started to scroll down, I started to find it more and more often where the idea does exist. You see the total number of trades. This one is a little more restrictive, so on that one. But it is there. It does exist. And so that's how we stumbled across this is that, okay, well, let's look for a time frame where this condition exists. And so when I ran the strategy tester, the 3 minute, it exists a lot on the 3 minute, more than any other time frame on the strategy tester. And it's a simple piece where you have a buy shark fin above VWAP and you have a sell shark fin below VWAP. That occurrence exists the most on the 3 minute chart. It does exist on the 5 minute. It does exist on the 3 minute or on the 2 minute, and it does exist on the 1 minute, but it exists the most times on the 3 minute, right? That's very important. And that's big. So let's look at the 3 minute here. And let's look for this. All right, so here's a shark fin. It's below VWAP. Okay, that doesn't meet our case. And I'm on Euro USD right now. So let's hunt for this on Euro USD. And all right, here we have you can see how very rare these are, but I found one. So here's a shark fin. It's above VWAP and it pushes up. I was like, okay, we do have one on the 3 minute. Great. I'm gonna go to NQ really quick because it's high volatility matters and volume matters. So it's gonna be a little rare on other instruments. But let's look at NQ on this. So let's just hunt through this. Just walk with me through this piece of it. Let's hunt for one. And if you spot one, you let me know. All right, so here it is. Okay. We have a 3 minute sale shark fin right here. And it's under VWAP. Oh, okay. And what happens? It sells down. Not only does it sell down, but it usually sells past the last low. So it sells down and it sells past the last low. So everyone can see that right there. We found one under VWAP and it sells down past the low. Okay, that's cool. Let's go find another one. Here's one. Well, no, let's find a true one. Let's find a true one because I'll get to that. Um, let's look at it from both ways. Okay, we got some buy shark fins, or well, no, let me say true shark fins. Okay, all right, we'll get to that. All right, that's above VWAP, so we're just hunting for that. We found one that's below, and we're looking for one that's above. All right, here's one. Here's a shark fin right here. It's above VWAP. Here's the last high right here. And we have it extends past the last high and it's above VWAP. So there's another one. All right, so here's another one here. It didn't close below it, but that is one as well. All right, so let's just mark that one. Here's the last high right there, and we surpassed the last high, and it goes. Okay, so everybody gets the concept, right? We found a buy one above it and a one below it. This occurs the most on lower time frames, or yeah, on the 3 minute. It occurs the most, not on lower time frames, but it primarily from us running our strategy tester. And I don't know the code that I have plugged in currently. Let me just look at the code to make sure. Okay, so this code is based on our settings, 834, 2, and 7. There has to be a bullish hammer, a morning star. So this is pretty similar to what we're going to be talking about tonight. Let me run the strategy tester on that. All right, we have an 80% result on that. It occurs 5 times. And this is just running, it's running from the time length. It's only running from what it can see on the screen. So it occurred 5 times. The win rate is 80%. Right. There's some things that I'll have to adjust to this, but on how much is taking profit, where's the stop loss and all that stuff. But for the most part, you can see that what the win rate is when it runs this strategy, it's 80%. It occurs that it found 5 occasions where it ran. All right. So that's the case. That is awesome. I was like, well, okay, that's great. So we took that information and we said, we said, okay, that's great. But you know what we love to do? Show me where it doesn't work. And so we had to go hunting for it. And here it is again. You have a shark fin. You have it's above VWAP. And here's the last high. And that was actually, I mean, this thing ran all day. But let's just say we're looking for a 1 or 2. So that would have been there. You would have got that. So there's another occasion. Let me see when it doesn't work. A shark fin above VWAP. Okay, here I am. I'm clearly above VWAP. And okay, let's call this a shark fin. This is a shark fin. It's breaking the bands, barely breaking the bands, and it's barely this. So let's put one here. And this runs up. We're pulling below the pattern. And okay, that's there. Okay. So what we have now, what we've discovered is 2 things, and I want you to write this down. Is number 1, when the price is above VWAP. All right, that's the first condition. That's our first filter. When price is above VWAP, is there a bullish shark fin present? Right? That's the first thing we're going to ask. And vice versa that when price is below VWAP, is there a bearish shark fin? Very simple, very simple. And got to get my spelling right. 2 questions that are very simple. And what you have here is you have a filter that you now have. It's just these 2 simple questions. Where is price relative to the shark? Where is price relative to VWAP? And is there a shark fin present? All right. And so those are 2 questions that we always have to ask with this strategy. Take a screenshot of that. Remember that. That's going to be important. Does everybody understand just that concept right there? Because we're going to go a little bit deeper here in a second.
Yes.
Yep, I got you, Tim. Yep.
Okay.
And just clarify, you said VWAP should be a session anchored VWAP, so not just
Correct.
the regular VWAP.
Correct. Good question. Yeah. It should be a session anchor VWAP. There's going to be an instance where we're going to change that. But for what we're doing right now, it should be a session anchor. And you can anchor that to anything, but we always want that anchored to the opening of the session. That's the only thing that you have to do. When you make sure that you don't have a multiplier on your VWAP. So multiplier says we'll take it times the session and we'll add to it like a Bollinger Band. So that, this is just multiply the weighted average, the volume weighted average, multiply it 1 time, 2 times, 3 times. We don't want that. So we just want it anchored to the session. That's it. So great question. All right, so that's a very simple elementary strategy. If price is above VWAP, price is bullish. All right, that's really what you're determining. If price is below VWAP, it's bearish. And so now we're just talking about trend continuation. If price is above VWAP, it's bullish. We want to continue with the trend because we get the biggest run when we continue with the trend. If price is below VWAP, it's a bearish trend. So we want to continue with the bears as long as it's below VWAP. All right. So let's get rid of that. Let's go back to this thought of price being above VWAP. So we took that information and we began to do a lot of research on, okay, if that's the anomaly, we find these occurrences that rarely happen, and it happens the most on a 3-minute. It'll happen 2 to 3 times in the morning, 2 to 3 times in the afternoon, and you need that volume there. So that'll happen day in and day out. That's great. How do we take that strategy and make it and be sure that it's going to work? We started talking about show me the times where it doesn't work, and you can see that the strategy tester, this one ran it to 80%, which means that 20% of the time it didn't work with that strategy tester. And so what we began to find out is the times that it didn't work, it was either a wrong entry or it was coming up against a trend reversal where the trend is going another opposite direction. And it really wasn't there. And so, okay, well, if the filters are with the strategy that says those 2 simple questions, price above VWAP, it's a buy. Price below VWAP, it's a sell. How do we confirm that that is going to be the case? All right. And so now we're going to add in another confluence to that simple strategy to make sure that that is always the case. All right, here we go. We're going to add in 3 candle patterns. And really, the fourth one is a C and D type setup. So we're just going to add in 3, and then I'll show you what the fourth one is. All right. So what we're going to add in, and hopefully you're taking notes, is we're going to add in 3 candle patterns. We're going to add in first candle pattern we're going to add in is the morning star candle pattern. All right. So when we put that into the strategy tester, we said, okay, find all the occasions when price is above VWAP and the fast MA is breaking the band, is breaking the 25 and breaking the lower band. That's what we call the Sharkfin. Find me all the occasions when it does that. Strategy tester would come back. They said, okay, you're accurate. But we added in this candle pattern, the morning star candle pattern. And when we did that, our win rate drastically increased. We said, okay, out of the ones that you find, only take the ones Only take the ones that have a morning star candle pattern. And the win rate drastically increase with the morning star candle pattern and a bullish engulfing candle pattern or candle and a um hammer candle. And we're going to show those. So make sure you get a screenshot of this. So price above VWAP, you're going to have a Sharkfin, and you're going to have a morning star candle pattern, a bullish engulfing candle pattern, and a hammer pattern. Now, let's talk about bearish on the bearish side, because we're going to cover both. Is on the bearish side, you're going to have you're going to have the same thing. You're going to have you still have a morning star candle in lieu of a bullish. You're going to have a bearish. In lieu of a hammer, you're going to have what they call a gravestone doji, which is basically an upside down hammer. All right, so that's on the bearish side, bullish, bearish. Now I'm going to add a fourth one in here, and the fourth one is less. I really don't depend on this, but it's called a pin bar for the fourth one. All right, so everybody can see that. Make sure you make note of that. When we see those, we're going to take the trade. All right, so let's take a look at this. Let me share something.
Just not the same. It's not the right way.
Gotcha. All right, let me share something here. All right, stop share here and share to screen one. Share. All right, everybody should be seeing my screen. All right, so for those that don't know what those candle patterns are, for a hammer, it looks like a hammer. You're going to have a lot of it, an exhaustion tail, and you're going to have a block on top, right? And usually those are green. That's what we call a hammer. Bullish engulfing, there's going to be a bullish candle that engulfs the previous candle. Morning star and that's a 2-candle pattern. So hammer is a 1-candle pattern. It's just going to be one candle that looks like a hammer. The bullish engulfing is going to be a 2-candle. It's going to be one candle that's going to engulf the other. Morning star is going to be a 3-candle pattern. And I really love the morning star. You saw it on this morning's call, where you have a red candle, you have a small red candle, and then you're going to have an engulfing green candle. That's a morning star pattern. Usually you like to see these close first and then take the retracement back of that candle as the entry, right? But a lot of times I've seen this so much that I just jump into the engulfing candle and take it up. Those are the 3 candle patterns that we're looking for. And then on the bearish side, it's the same candle, but we're just going to just flip those upside down. So a gravestone is going to look like a hammer flipped upside down. This engulfing candle is just going to be reversed. It'll be on top and have a red candle. This will be a green candle going up, 2 green candles, and 1 red going down. All right, so let's look at the chart and let's take a look at this, because this is the second component that we're going to add to the confluence. Find the right screen here. Share. All right, everyone should be seeing my screen. All right, so let's take a look at that. I'm on the 3-minute, and let's look at those trades that we saw today. it was, or actually, no, we're not going to do that one because that's later in the training. So let's look at let's find one. All right, let's look at this one. All right, we have a shark fin here. We're below VWAP. Price pushes down. So everyone sees that. We have that here is price is below VWAP. So we should be looking for sales and then price pushes down. All right, so that ran a 1 to 6 risk reward. Let's zoom in on that and look at that candle pattern because this is the second confluence. All right, so you have a morning star pattern with this. You have a green candle push up. You have a small green candle that shows the momentum has stalled. And then you have this engulfing candle here. That's a 3 candle. We call that a morning star pattern. The entry is on the next candle. You take that entry off of the next candle here. Pull the stop loss just has to be pulled above the morning star. So the stop loss is above the morning star, slightly above. Sometimes it retests that, so I like to pull it up a little bit above the morning star pattern. And then all I look for is a 1 to 2 because that's going to give me that every time, but it usually runs more than that. Oh, let me see. It usually runs more than that. All right, so that was a morning star. So I would get out at 1 to 2, but you can see that it ran a lot further if you can hold it for a lot further. All right, and that's a 1 to 7 risk reward. All right, let's look for another one here. And let's see. Let's see. So you see how rare these are, but I'm going to show you how how it's not that rare that it comes up like, okay, here's another one. Here's a bullish one. All right, so let's you can see the bullish one here. Price goes up, pull below the pattern. This ran a 1 to 4. Let's look at that candle pattern. All right. So this here, we have a hammer candle. So you see that the wick there, the box at the top, that's a hammer candle. Now you'll say, well, hey, this is red. Well, it's red on the 3-minute. I'm sure if I go down to a 2 to 1, this is 2 1-minute candles. I'm sure that on the 1-minute we'll have a nice hammer there. But this is a hammer candle. It's 3 minutes. If I go up to the 5-minute, these two would be combined, which would be a morning star pattern. It comes down, have one candle, and then the next candle would be up. All right, so it's kind of hard to see here, but this is a hammer candle. You do have a morning star pattern on the other time frames, and you have the shark fin, and it's above VWAP for that one. This is one here. It's above VWAP. Technically, it appears VWAP, but it's still above VWAP. All right. On this one, this is a morning star pattern. Another way that the morning star looks. You have the red candle. You have a slowed down, smaller red candle, and then you have an engulfing green candle. You take it on the next one and pull below the morning star candle. Let me show you what that does when you do that and hold the trade. So I would take the entry off of this candle, pull below the morning star candle there. And like I said, go slightly below and then look for the 1 to 2. And I believe this one, yeah, this one went a lot further. I remember this trade. I was in it. And there it is. So even though price came back and retraced, it never went below the stop loss. It pushed all the way up to the top. All right. Any questions about candlestick patterns? All right, perfect. So hopefully you jotted down notes and go back and test that. Here's another one right here. Here's a shark fin, a 3-minute shark fin. Price is above VWAP. So we want to get in. We don't want it to just blindly get in, which I made the mistake this morning, to blindly get in without looking at the candlestick pattern. But this one, look how far this one ran. I mean, that's really the bottom there. But let's look at that candlestick pattern and just examine that. All right. So this one's a little choppy. It does give you, this is a pin bar. This is what a pin bar looks like. So a pin bar is, it shows you exhaustion, but it doesn't give you the hammer. It bends back a little bit, and that's called a pin bar. Right? So that's a pin bar pattern. On another time frame, you take this 1, 2, 3, maybe on the 15 or 5 minute, you will see a morning star pattern here. And I can see it just because I've seen these a lot where price pushed down. It's then you have this smaller area where it's ranging in, and then you have the engulfing candle. That's morning star. The entry is probably going to be up here. But on something like that, if you're taking that as the confluence and getting in on a pin bar, you're pulling below that pin bar, the stop loss. And then you're ideally looking for the 1 to 2. You're looking for a 1 to 2 there. And when you stretch it over, it does give you a 1 to 2 and a lot more than that. It actually gives you a 1 to 10. And I think it's a little bit more. I think that was the beginning of something, but it gives you even a lot more than that. All right. Any questions so far? I've given you 2 confluences: price action above VWAP with a candlestick pattern, price action below VWAP with a shark. Wait, excuse me. Let me start over. Price action above VWAP with a shark fin, a bullish shark fin, and a candlestick pattern. All right. Price action below VWAP with a bearish shark fin and the candle pattern. All right. Those are the confluences. When you find price action above VWAP with the shark fin, that's a very rare occurrence. When you add the candlestick pattern to that, it makes it almost, we're not going to call it 100%, but it's almost 100%. All right.
Tim, I have a quick question, if you don't
Yes.
mind.
Yes.
So I understand the below and above, but you see how some of them are kind of closely touching VWAP. Should it be a clean above and below, or is it okay for it to be touching and staying above and below VWAP?
Great question, and I'm going to answer that.
Okay, thank you.
Coming up. Stay tuned. Right? Because you can see that, I mean, it's great already, but it's just those kind of questions. It's like there's still some gray area. So there is reasons why stuff is happening the way. Okay, so I'm going to answer that, Kamika, and let me just go into that. All right. Any other questions before I push on and that's actually the next subject that I'm going to talk about. Any questions so far or any clarifications? Very simple strategy. All right. Oh, I'm okay. So I'm seeing, come off mute and ask me. I'm seeing now the question of the pin bar. I showed the pin bar, but if you have questions, come off mute and show it because I'm not really looking at the chat over here to the left. On that. Okay. Now, Kamika asked a very good question because as you're developing this strategy, those are the kind of questions you're going to ask. It's like, okay, what if we're used to taking, the break of the band and different things like that. And this is when in the research, this is what we found. Right now, if you look at our TDI settings, the TDI settings is 8, 34, and 2 as the fast MA. We don't use the slow MA. When you go to style, we usually click off of the slow MA. We're only using the fast MA. So for the inputs, we have a 8, 34, and a 2. But what happens when, let's say Kamika was talking about when it breaks the band or, we see like this move here. Yeah, price push up. We would have loved to been in this move, but there was prices below the band. And so how do we get in those type of moves? Or this sell off that happened this more after price pushed up, it sold off even more. And we didn't have a shark fin. How do we get in those moves? It's usually because of the TDI settings. When you look at the TDI settings that we have, it's meant for the TDI settings that we have are meant for swing trading. That's the conclusion that I gave to, is that the 8, 34, 2, and 7 is meant for swing trading. And we're not swing traders. We're scalpers. And so we want a very clear shark fin, a very clear signal. And at the same time, we know that when price is breaking the band, it may not be all the way at 75, it may not be all the way at 25, but it's still breaking the band. And we see that those are playing out. Prices below VWAP. It's broken the bands here. So yeah, we can catch this sell down. It's sold all the way down, but we can catch part of that. Up here, it's coming close to the band. You can see that here. It's coming close to the band, but it doesn't give us a signal. And price push down. We would have loved to have been in that sale, but how do we catch those? It's the TDI. And so what we do is you have to adjust the TDI based on the time frame that you're trading. You need a quicker reaction based on the time frame. All right, so these are the recommendations that I'm saying on if you're trading NQ, any of the indices, gold, any of the faster moving pairs, and you're trading that through the New York session, morning session, these are the recommendations that I would say for the RSI to give you a clearer signal, because it'll eliminate a lot of what you're seeing where when it barely touches the VWAP or dips slightly below and different things. And then I'll address your question more clear. All right, but I first want to get you to adjust the TDI and constantly adjust it. So these are the recommendations that I'm saying, and I'll explain why. RSI period, I want you to take that to 5. All right, take RSI to 5. Now, when you take that to 5, I want you to see what happens to the TDI. I'm going to bring it back to 8. All right, and so see how 8 contracts that, where the bands move further away from 75 and 25. The lower that I go, you'll see those bands start to get closer to 75 and 25. I'm at 6. Now I'm at 5. You see how close it is to 75 now? See how close it is to 25? That's because based on market conditions, when a lot of volume comes in, the RSI period measures that volume. The lower it is, the closer it's going to be to overextend it. So even though this isn't breaking the band, it's still close to 25. If we keep decreasing that down, we're going to see that RSI push up closer to 75. The more that you reduce that. And there's certain environments that you want to have a more sensitive RSI for that if you're in a market that has rapid price change, you want to have a more aggressive RSI period. Band length. Now you can see that the band is going up and down and it's reacting heavily to price action. That's not a good thing when you're trading fast markets. You want a more consistent, steady line. And so we're going to take our band length to 50. Watch what happens to the band as I keep increasing it. You see how the band is starting to straighten out? All right, we're going to take that all the way to 50. All right, now let's look at this move down. Right, so now RSI is the RSI period is 5, band length is 50. RSI is now touching the top band and is closer to that 75. I have you do one more thing. Fast MA, and this is the most, if you don't change anything else, change Fast MA. The lower that it goes, it's for when the markets are very slow. So you may say, if you're in evening markets, or if you're in after around like 1 or 2 o'clock when the market's moving really slow, you're not going to get a signal. You have to increase the fast MA to 1. You see what happened to the RSI? We now have a shark fin. Everybody see that? I'm going to zoom in on this. It's almost a shark fin, but you see that break of the band, and you see it that we're almost above 75. So it's close to a set, but you could have got in on that sale right here in the afternoon. Happened at 12:30 in the afternoon. If I take this back to our original settings, on that same sale, you see how you don't have a signal there now? No signal right there. But it's 12:30 in the afternoon. I reduce this to 5, take this to 50, take this to 1. That same sale down that happened at 12:30, I now have a signal for. Right? But you don't want that in fast moving markets. That was at 12:30. I switched my TDI and I have a signal. In the morning, 8 o'clock volume, look at that choppiness in the TDI. We don't want that in fast moving markets. We want that in the slow market, a more sensitive TDI. So in the morning, what we do is I'm fine with 5 and 50, but we want to take the fast MA to 3. Now look at the signal. For right here, look how clean that signal is now. A clean shark fin. And as soon as it touches the grid, when it bends back up, you can enter into the trade. And so that was this move up today. If you notice this morning, that first trade that I took, when we got on the call and it went further down, I took this, but I didn't have a signal on the RSI this morning. So band was breaking down, but it wasn't bending back up. And so we took the second trade when it bent back up, and that was the actual signal. Got an engulfing candle, took it back up. All right, so I want you to play around with this with the TDI settings. In slow moving markets, you can play around for the RSI period. I want that to range between 5 to 10. 5 to 10. 10 will give you is a very fast moving market. Very fast moving market, move it to 10. Normally, you're going to see it at 5, or you're going to see mine at 5. If it's a really slow market, go down. I wouldn't even go. If it's a slow moving market, why are you trading it? I wouldn't even trade it. I like band length 50, but you may have a different preference. Right now, we're using 34. I like the smoothed out band at 50. So I'm leaving mine at 50, but you play around, let me know which one you like. But this is the important one, the fast MA. If markets is moving slow, if you're at 1 o'clock, 2 o'clock in the afternoon, if you're trading evening markets at 6 o'clock, 7 o'clock p.m., your fast MA should go lower, down to 1. If you're trading fast markets like that prime 8 o'clock central morning markets when we're on the morning call, bump it up to like 3. This can range. The range could be, I like to keep mine at 3 because that's going to be a steady signal in the fast markets. That's all I'm looking for is at 3. But if I can't find anything like 12:30, I traded this short all the way down. I had my fast MA at 1 to catch that signal to go down. It's like, oh, I don't see anything. Okay, I don't see anything. Let me change this to 1 and then see if I see anything. Oh, I see something. Okay, let me take that. And the divergence counts too. It could be a shark fin or divergence, over or above. Any questions on that before I answer Kamika's question? Because I just wanted to address that TDI. Any questions on the TDI? All right. So I kind of addressed two things. I addressed TDI and I addressed the TDI settings and how you can get into how you can find signals. Now, I'm just covering A plus setups right now. The the more volume that you have, the more applicable the weighted average price is going to be, the VWAP is going to be. So the prime time to trade these type of settings are this type of strategy are when there's a lot of volume that's in the market. That's for us is usually between that 6 a.m. to 12 p.m. range, Central Time. You're going to find these type of moves. As the day goes on, the setups you'll find, for instance, today we talked about on the call, we were trading this up here, but we said that price is probably going to sweep the Tokyo lows, which is down here, and I drew a box and said stop losses are right here under the Tokyo lows, and that's exactly where price went. So morning markets, we traded this. But if you knew that that's where price is going, you're going to start looking for now sales. Price crosses beneath VWAP. So now I'm looking for sales. That's when it's late in the day. It's 12:30, 1:30, 2 o'clock. And I'm looking for the sales because we're selling down. That's when I go to the TDI and I begin to adjust my settings to capture those moves. That makes sense? Everybody with me?
So Tim, when you
Yes.
said you would adjust your settings to capture those moves, does that mean that your fast moving average would have been changed from a 3 to a 1?
Correct.
Okay.
Yeah, that's pretty much the only thing I would probably change. Now, sometimes I still don't see it, so I adjust down my RSI period. But the main thing I'm changing is that fast MA to capture a slower moving market with less volume. All right, so now, so we have some very cool stuff that we're doing, but there's some nuances within the strategy. So everything that I just went over, price relative to VWAP, if it's above, let's just talk bullish, price is above VWAP, that's number one. A shark fin, a bullish shark fin, that's number two. And then candle pattern, that's number three. Those are the three confluences that you need to enter into the buy, and minimum 1 to 2. Price pull below the candle pattern, 1 to 2. All right. But I know a lot of you are going to want to trade even more than that. And so now that's from an A plus, what does a B look like? And what does a C type setup look like? You have the A, and you should just trade the A's because those come 2 or 3 times a day in the morning. They'll come a little bit more in the afternoon. But let's just say you see a B setup or a C setup. Now, we're never trading against the trend, right? But what if we see the C setup? So, for instance, today, we took some trades today, and this was the trade one here. This was trade one. Then we did trade 2 here. I think we did 4 and stuff like that too, but let's just use this as an example for tonight. All right, so with this one, if you look at this second trade, it does not have a shark fin, right? It does have an engulfing candle, but it does not have a shark fin. So how do we get in on that trade? So the shark fin, the original shark fin, acts as a benchmark. It says that price is going in a bullish pattern. We're still above VWAP. We haven't broken structure. You still need those confluences there. But when you notice a trend, let me just find a trend. This is a strong trend here, where price is just climbing. It was a strong trend. When you notice this trend coming up, you'll notice a characteristic of the TDI. And let me check my settings. Yeah. All right. So this is a morning session and price is just climbing. It's going crazy. It's climbing and it really never stops. And so you caught this initial one, and then this one goes. What you'll notice in strong trends is that your bottom band becomes the mean reversion. So prices, smart money, liquidity, institutional traders, they're placing orders on the upside. They want to pull back to a mean. And that mean is usually a MA, or it's some level of there's some level where it wants to pull back, MA, or sometimes it'll pull back to VWAP. All right. When you find that it does that, normally the TDI is going to follow it up and it's going to start to range above the 50. There is going to be a touch of the band. It may not be a shark fin, it may not be below 25, but when the move started, you had a great push up. When it comes back to retrace, usually it's going to be a band touch. In a heavy market, a heavily trending market, a lot of times what you're also going to find is the use of the middle band. So you're not always going to find. So when we see that occur, when price does this mean reversion, it does this pullback, and we see, okay, it's pulling back. It may not make it all the way down to VWAP, but what is it pulling back to? And what we see is that, okay, we're touching the band. Now, I'll go through my TDI settings and say, okay, I don't have a clean shark fin right here. So, but I have a nice break of the band there. If I, I can see a nice break of the band. There's some things that the TDI is doing that is fine, but it's not a clear signal. It's not like this one. It's not a clear signal, but it's still a signal. You're going with the trend. You're coming up against a level of support and resistance. It's a retest, and it's touching the band. Those are more of a B, C setup that we could still take to get back into the trade. All right, a D type set or C and D type setup is when they do these type of shark fins at the 50. So you can see that's right around here where it does the short pullback. Those are very risky. We would rather see it come all the way back to the bottom band. The same thing is true for the downside. So where was we at this morning or this afternoon? So here, you can see now I did make this on the shark fin, but as you can see is what you can see, and this was a slow market when we started having these sales. So I'm going to adjust the settings a little bit. And I need to adjust the band length. Probably 34. All right. Yeah, we'll do that. All right. So for these sell-offs here, you can see that they're not true shark fins, but they are touching the band on the more, once I adjust the settings, they are touching the band. And so I can take those down to when I find confluence working against it. So that's what we're calling B, C type setups. They still play out, but they're a little less, they don't play out as long as the A setups. And if you are just looking for something, you'll see those come. And then also you can trade the divergence. So you can see that this is below VWAP. This pushes up higher, but TDI stays lower. That's divergence. Yeah, and it has a gravestone doji candle. It has a morning star candle. Let me zoom in on that. And so those are confluences that says, yeah, you can still take that. So here's the doji gravestone, more of a pin bar just because the bottom is retraced a little bit. Here's the green candle pushing up. Here's the red candle. So that's a 3-candle pattern. You can enter in on this candle and pull above the gravestone and look for the 1 to 2. Yeah, pull up above the gravestone, look for a 1 to 2. All right, so that's a 1 to 2 right there, and it gives you that. So C-type setup, we can still do those type of setups all day, every day. And this one was based off of the divergence. All right, any questions on that?
I have a question, Tim.
Yeah.
The shark fins, now, do they have to be our standard under 25 for the bullish shark fin, or is it just when it crosses over the bottom band?
Yes, with the caveat. Yes, based off of your TDI settings. So, for instance, this morning, I wasn't really getting a signal on that second trade. But I did have confluence I had a conservative setting. So I had 5, 50, and believe I had 3 this morning. And so that was this one here. It pushed up, but the second one that I took, I really didn't have the confluence. And for the second one, but I knew exactly what it was doing just because of that mid 50 band being broken. And there was and I knew that it was a shark fin at the 50 on the heavy trend, and we were above VWAP. But for more confluence, I just stepped down to the minute chart. And what I saw on the minute was I saw the divergence. So we're lower here, we're higher here, and then we're that is right here, and we're lower on the TDI. Right. So that was the confluence to get into that second trade. That this was the benchmark. Then we just did a mean reversion pullback, and we got in on that second trade. Now, if I would have adjusted the TDI on the 1 minute down to a 1, you see, I now have the shark fin on the 1 minute. But when you back test that, you already know that. I already knew that I had a very conservative setting, and it wasn't giving me the shark fin. But I knew if I went down to 1, I would have if I went down to 1, I would have a shark fin, which I did. And then all I had to do was adjust the band to like a 32. So you see the shark fin very clear right there. Right. So if you know that only reason I'm not seeing the shark fin is just because of my settings, then you can still get in on that trade. That makes sense?
Yes.
Okay.
I had a quick question too. And so for stop loss, is stop loss always below or above the candlestick pattern in which we enter on?
Correct.
Okay, perfect.
Yep. So here we found the confluence. And so this morning I had to go down to I saw the 3 minute was ready, but I had to go down to the 1 minute to find the confluence. And sometimes you'll have to shift through that to find it. But if you just did that on the 3 minute on that second move, on the 3 minute right here, it didn't give you this push down with the red candle, didn't give you the candlestick pattern, and it didn't give you a good place to put a stop loss. And so going down to the 1 minute, in that kind of knowing that we're still above VWAP, I had to go down to the 1 minute to find the candlestick pattern, which isn't ideal. And the shark fin's not there, but you can see the engulfing candle right there. And so your stop loss is going to be just below that. Now, this third one was pretty clear. We had, and again, this was, I had to, on the third one, I had to go to the, here's the third one here. We didn't have a shark fin. We had the divergence. The 3-minute divergence was there, and that's enough. So 3-minute, price is still above VWAP. We have 3-minute divergence, but then I had to go down to the 1 minute and just to see the candlestick, because that's the third confluence that you always need. And so that's on the call when I seen the pin bar candle, the first candle, and then the third candle pushing up above the pin bar. That's where I hurry up and got in on that, because that's a morning star pattern. Stop loss is below the pin bar. So that's a great place to put stop loss. Now, depending on when you got in, regardless of where you got in, you always want that below the signal, the candlestick pattern. And usually sometimes it'll test that. So you usually want to be a little bit below it. And then it depends on where you are. And so you're always looking for a 1 to 2 at minimum, right? You're always looking for a 1 to 2. And, but normally it's going to break if it's bullish and it's in a trend, it's going to break the last higher high or high and create a higher high. And that's exactly what it did. So stop loss below the candlestick pattern, ideally below VWAP, but if it's too high above VWAP, like here, and I don't want to pull it all the way, just below the candle pattern, and then pushing to break the high in a minimum 1 to 2. And then if it runs further, great.
Listen, so Tim, this example that you're using, like this is my favorite right here, because you have low risk, very, very low risk.
Yeah.
You know where your stop loss is going. You got the VWAP in play, but you got that wick right there. But it's extremely high reward on a trade like this, and so like it doesn't get much better.
Yeah.
Really doesn't get much better with low risk, high reward on these kind of trades.
Yeah. Low risk, high reward. You just have to be disciplined and seeing those three confluences.
Yep.
Because a lot of times, price, you saw it this morning. I made that mistake this morning by taking the trade here. I was like, it was on the 1 minute. On the 3 minute, if I would have just looked at the 3 minute, it wasn't there. It was like right here. It was somewhere, yeah, it was like right here, where price it didn't bend up. So really you want that cup. And you want the candlestick pattern. The candlestick pattern wasn't there. So what you would like to see is this is the lower band on the TDI. You want to see it break that band, ideally being above the 25, but that's an open shark fin right there. So you don't want to take it on an open shark fin. You want to take it once it cups up. That's where you want to take it at. And that's usually the completion of the engulfing candle, or the completion of, you can see it here, is that we have the engulfing candle, and right where that engulfing candle is, it presents the opportunity. Here, we don't have an engulfing candle. We don't have a morning star. We have a slight hammer candle, but the preceding candle is bearish. So that's not the entry. That would be the entry right here. That gives you a very stern and visual piece. And that's the only time that this won't work, is if you enter in too early because all your confluences wasn't there. So if you're patient enough to wait on it and see it, then yeah, you can take it.
Tim, this is Tisha. I have a question that's kind of related, but not related. Is it possible where the next level will be? I don't know. Someone's phone's on. Someone's giving feedback.
I got it.
Would the next level be for this is to make this strategy into an indicator?
Yeah,
Is that a possibility or no?
yeah. So it is. I mean, it's an indicator. Like when I run it right now, I'll run the indicator right now, and I don't know which indicator this is, but you can see the indicator right here. But it doesn't offer you the flexibility with the indicator. I guess here you could change the settings on it.
Hmm.
You could change it, but there are things that um that will pop up that I would just say I would like to manually navigate that
Hmm.
to
Hmm.
control. You can control as a trader. You have the discretion to control what's going on based on what you're seeing. The indicator has to stay strict to the rule, and so which means that you're going to miss. Like you can see this morning, the indicator didn't give you a signal. It's very strict in what it wants to see, and so
Okay.
we
Hmm.
would have missed all those trades this morning.
Uh, Good to know.
Yeah. Yeah, the indicator has to it's a computation where you have to put in specific criteria and it'll follow your criteria. And for traders, that criteria changes a lot of what we're looking for. We're still looking for the same thing, but there's little tweaks where like I think this is I see this. This is below VWAP and I don't have a signal, but yeah, this is divergent and and we have the pin bar pattern or the morning star pattern, and let's get in on this. Yeah.
So, Tim, I'm looking at gold right now.
Now, gold
Um,
presented a lot of opportunity this today with this bullish trend, but go ahead with what you're talking about.
well, look at it now.
Yeah.
Is that a good example of the strategy here with we got the pin bar prices above VWAP or buy?
Yeah. So number one, it's not a lot of volume flowing.
Right.
And so this strategy works best when there's a lot of volume. But what we do is we open the TDI and we just adjust for it. And so it's a low volume. You want to take that down to 1 in a low volume. And with low volume, you may want to take the band length back to 34, and you may want to take this back up to 8 in a slow moving market. Let's leave it at 5. But you make those kind of adjustments. You say you don't truly have one, but it is a signal, like where it produced the shark fin. And then the next thing you look at is what is the candlestick pattern. So you have an engulfing candle here. You really don't have a pattern that will give you the signal to get into that. And let's go to the 1 minute, see what you do. So the 1 minute really doesn't give you a signal till here, which would be the divergence, but you don't really have, well, I guess you do. I guess you do have a pin bar right here. And you got a hammer candle right there. So that is a signal. You have shark fin divergence with a hammer candle and a pin bar candle. You take the next candle, and that would have given you a 1 to 2, where you would have pulled below. And for something like this late in the market, I would have pulled below VWAP. And then there's your 1 to 2. And then, of course, this is the last high. It's going to move above that high. And that was a 1 to 5. But gold has been very bullish. When we were trading at this, or when it was this morning, you had a very clean pattern on gold, and you had plenty of shark fins. So you see all these bullish shark fins above, below VWAP. How many opportunities you had on gold? So here's a shark fin. If you look at the candlestick pattern, it is a morning star. Or actually, this is an engulfing. This would have been engulfed. You would have took it here. That would have been the first one. Pull below that engulfing candle and just look for the 1 to 2, which was achieved. And these can be short-term or long-term holds. The next one, if you just look at it, is right here. Price above VWAP. You have a morning star pattern. You have a pin. This is a pin ball, a pin bar, excuse me. And then it's also a morning star. And then you have the divergence here, which was engulfing. But let's just take the pin bar, the next candle there, which would have brung you into a little bit more drawdown, but still you pull below the pin bar and look for the 1 to 2. All right, the third one, here's the shark fin right there. That's the third one. Long position, you have engulfing candle. It really didn't give you the candlestick, so we'll skip over that one. Because you were like, well, we made money. But this one we would have took. This one is an engulfing candle. We would have took that one. This one is close enough. We would have took that one. So you can see that once the market starts to trend, like you can catch those all day, at least a 1 to 2, but large times, a lot longer runs. So great example. Before we end, a couple more things I want to touch on is occurrences that happen during news events. So there's a little pivot to the strategy during news events that's important. I'm going to go back to our last Friday NFP, and we got Wednesday. We have CPI, so it'll apply to tomorrow's call as well at 7:30 Central. But let me go to and someone who in here taught me how to instantly jump to a date. You hit Control what?
G.
Control G. Thank you. Is it 12:06? Right. Is it G? This looks like. I think it was something else, wasn't it?
It's Alt G.
Alt G. Okay, that's right. Okay. There it goes. All right. December 6th was NFP. At what time was that? 7:30? Well, we'll just go to December 6th. All right, here's December 6th. 7:30 is right here. So this is NFP is the this is the candle for NFP. You saw this big push up on heavy news days like that, and we're going to do this tomorrow. It's important to re-anchor the VWAP to the news candle. Because once you can see that once the news turns bullish, we really never come back to retest VWAP. So the way to do that is where you go to enter the long position, short position. If you scroll down to anchored VWAP, click that indicator and click on that candle. And it gives you the VWAP anchored to the news. That's what we're going to do tomorrow. So when price runs up after the news, we're not trading the news, but the signals that we get, look at this signal here. You got a shark fin, and it comes down and hits the VWAP candle, stays above it, and we just take that one for the 1 or 2.
Tim, can you go back to the point where you were anchoring it to that news, please?
Yeah.
And show that?
Yep. So where you go for long position, short position box, this long position box, that same place, in lieu of clicking long position, short position, scroll down until you get to anchored VWAP. You click that.
Thank you.
Yep. And then just click it, and then left click on the candle where the news happened. And that'll re-anchor a VWAP to the news. Because when news happens and the news is affects price action, it's not going to come down to your session anchor VWAP. It's going to come down to your news VWAP. All right, so we can see here we have the Sharkfin divergence, and we caught the 1 to 2 on that news event. Oh, gee. 6, go to.
So when do you go back to the regular session VWAP after you switch to the news anchor VWAP?
Yeah, just after the day is gone. You only need it for that day. The day of the news.
Okay.
Because you just want to see where price is relative. So you remember the number one condition is price relative to the VWAP, session anchor VWAP. Well, on news days, you want to make sure that there isn't a news anchored VWAP where price is below. Like you may be trading it above the news, but you want to know where the VWAP is where price is below. And I'm trying to find it on the minute chart. Let me see if I can find it. 7:30. Yeah, it's here. So I'm going to anchor this to, you just anchor it to that. All right. So for instance, here, these right here, price is above. So the news hits at 7:30. Price is above VWAP, session anchor VWAP, which is my black line, but it's below the news anchor VWAP. So if you're trying to catch the buys, and it still end up working out, but you may get stopped out of the buys thinking like, well, why did I get stopped out? Well, because the news hit that day, and you have to anchor the VWAP and see where price is relative to the news anchor VWAP. But you get this morning star pattern right here. Hopefully you see this. And there's a deviation away from VWAP. So I know this is below, but once it breaks above VWAP, that is a morning star pattern. You take the next candle up and goes crazy. Right up above VWAP. So you don't have to trade the news. Just wait for you to get to the signal. This is the signal, the golfing candle, the morning star pattern, 1, 2, 3, breaks above VWAP, take the next one up, pull below the morning star pattern, and just get your 1 to 2, which is right here. But you could have held this one for a while. All right, that makes sense to everyone?
Tim, do you have certain settings on your anchored VWAP?
No, there's anchored VWAP is always steady. It just matters what it's anchored to. So you just let that, whenever you do an anchored VWAP, it's just a standard anchored VWAP, and you're just anchoring it to the right candle. Session anchored is just make sure that the session is anchored to the period, to the opening of the period. And I like this. I personally don't use the MAs too much. I like this because it doesn't matter what time frame you're on, it's still weighing the volume the same. And then I may toggle a MA on just as extra confluence, but I did not add MAs to the confluence because it's really unnecessary to. As long as this price is above VWAP, you're in buys. If it's below, you're in sales. When you backtest this, you're going to find opportunities to take the sales and different things. With my strategy, I don't go against the trend just because I want to maintain a high rate for this. Okay, so
but don't we have news every day though? Isn't there some sort of news?
Not really. You don't want to anchor a VWAP unless it's red folder.
Red folder, you said?
Yeah.
Okay.
Yeah. And remember, the main thing that we're concerned about is where price is relative to VWAP. And when you get a news candle on a yellow folder or orange folder, you'll notice that price is moving, but it's not moving drastically above normal price action. So it doesn't move the needle. So you can see what price is trading down here in this range, And then all of a sudden it jumps up and it's trading in this range. So VWAP jumps up and then that volume comes in. And so VWAP stays above the session anchor. On yellow orange folder news, you're not going to see, like for instance, let me just do that. Or no, I won't do it. You could back test it, but when you anchor it, you'll find that the news that you anchor it to with yellow and orange folder will be right on the session anchor VWAP. And then once that day is done, now you can leave that up on for a couple of days just to see where price is relative to it. Like you can see that this was anchored to NFP, and now here's Monday, and price is below session but above VWAP, and it's in consolidation. But as soon as it breaks out of that consolidation, I get rid of the VWAP and just trade price action the regular way. This is good. This works, like Mia pointed out. She saw it on gold. This works on US 30. This works on anything. So the same concept's going to be true. Like for instance, here, price is, I got the aggressive setting on. This is US 30. And you can see the signal. You see the shark fin right there. But let me go to a more conservative setting. So on the conservative setting, you really don't see it. On the aggressive setting, you do see it. What time is this? 8:30. But this sell down, price under VWAP, that was an easy sell down on US 30 with the same concept. You go to anything, oil, cocoa beans, whatever, it's going to be the same concept. And when you find that occurrence, see if I can find something. Australian dollar. Instantly, you're looking at sales. Here's a shark fin below VWAP. Gives you an engulfing candle. You enter in off of that engulfing candle. On the next candle down, pull it above the last piece, and there's your 1 to 2, but then it runs further than that. Right. So you can find this on any instrument. It works. It even works on stocks. So if you're evaluating stocks, what stocks are doing, it even works on stocks. But I use it a lot with NQ because that's the most value that we've been getting has been on NQ. So we like trading that, but you can find it on pretty much anything and know what price is doing. So hopefully this helps everybody use the strategy. Oh, we've been at 100% so far. like there's been a few times where it's just been human error, but the strategy works. Is very high probability of the trade. If all the confluences are there, very high probability that the trade will work out. So